All right, so the lesson today is we're going to look for price to hit a Fibonacci area, and then the market to stop out that area and make a quick reversal. Okay? And the only real criteria that we're going to have is your synthetic triggers not breaking the fib area. Everybody good with that? All right, so let's go take a look. All right, so we hit a fib area, right? Of course, this is overnight. I guess I should get to the morning session. Let me get to the morning on that day at least. Bear with me here. All right, so there's midnight on the 16th. Okay, now we're going to watch for Fibonacci areas. I mean, obviously, you know, this is a long trade. Everybody knows that, right? So we're going to watch for Fibonacci areas to get hit, and we're going to wait for it to get stopped out and put a reversal in. All right, so Fibonacci area has been hit, but we haven't stopped out a prior pivot, have we? And obviously the market sold off. Right, so synthetic triggers are breaking through resistance. So basically what we're looking for is we're looking for tops and bottoms. Right, so we have a fib area hit, let's just call it. And there's no stop out of that. All right, just kind of broke through and went through. All right, so we have a fib area hit again. Now, unfortunately, this one has the synthetic triggers breaking through, right? So this is not going to be a stop out reversal failure here. Does everybody recognize that? Remember our criteria, right? Very, very, very simple. Fibonacci area hit, looking for the stop out and reversal, but we don't want the synthetic triggers through the Fibonacci area. Everybody type a Y in the room if you understand that. So we're looking for counter trend edge trading opportunities, right? That's really what we're trying to help you guys kind of spot with this little lesson. So again, rules, Fibonacci area hit. Once the synthetic triggers get through it, we're not looking for counter trend trades. And we're just kind of randomly picked a day going back a couple weeks, 3 weeks, I guess. And we're just going to work our way through. Looks like that was crude news. So obviously very quick price action since every timestamp on here is 10:30. All right. Does this one qualify, guys? I'm going to use the crosshair tool. What do you think? We have a Fibonacci area hit. We stopped out the low pivot by 1 tick. And would you guys agree that the synthetic triggers didn't get through that area? All right, and look at the result, right? We went from fib area straight up 25 ticks. Granted, this is all in about 30 seconds because it's overnight, you know, after crude oil news. So probably untradeable, but we're just kind of going through the, you know, what if scenario. All right, so we have Fibonacci area hit. And Fibonacci area hit. Unfortunately, right, our synthetic triggers are breaking through there. So we're not going counter trend trade, right? Is everybody, can you guys see my pointer okay? And we're going to do this on a single time frame, Jay. So yes, if you have higher time frame support or resistance at the same spot, obviously it adds power to it. But we're going to keep the lesson very simple. We're just going to do it on one time frame for now, just to kind of make it easy. All right, so let's see what we've got. Kind of a mess here. All right, so let's say Fibonacci area hit. And you guys stop me if you don't understand what I'm doing, okay? We're looking for price to hit a Fibonacci area, and then we're looking for the market to stop out the low tick and then make a very, very quick reversal to the upside. Man, it's so close. Those synthetic triggers starting to drip through, right? You see how the synthetic triggers are starting to drip through? The lesson here, and you guys hear me talk about this 97 ways to Sunday, right? Right? If it's your first day in class, you're probably going, what the heck does that mean? Distance to the synthetic triggers. Right? If you've been in class for more than 3 or 4 days, you've heard me talk about this 27 times, right? The distance to the synthetic triggers is so large, it usually creates a nice little tension, I guess is the best way to put it. Imagine, this is kind of a rubber band, and so, this one little synthetic trigger nipping through, and again, maybe some additional opportunities as it closes above and the small triggers are rolling up here. Do you guys agree with this one? Support, stopped everybody out, and then a quick reversal to the upside. What do you guys think? Do you guys understand it and see it visually? I know if you're looking for trend trades with all of your trigger lines going in your direction, right, this trade, doesn't fit the bill. If you're looking to buy or sell at the edges, right, this is what I'm looking for when I'm looking for stop outs. Stopping out of the low pivot, a quick reversal, market's going up. All right, so we've seen a couple of them already. When you say, how do you see the stop out? Well, the market puts in this low pivot right here. So let me label this up just a little bit for you. Right, so we're at support, and the market puts in a low pivot. Any price beyond that low pivot, is a stop out of that pivot. So we got close, but then when we actually stopped out that low by a few ticks, right, and made a quick reversal to the upside, that's what we're looking for. Steve, you're talking about where do you enter? If you entered after the reversal bar and you entered right here, you'd be okay. Typically, there's a couple different ways to handle it, right? If you waited for the reversal bar and it's truly going to be the low, then you're going to be okay. Right? If you missed it and it pulled back into your small triggers that are rolled up, you get another opportunity to get in if you missed it. Or a lot of people will put a limit or stop entry order above the fib, and if it gets back up there, they'll go. How you get in, I don't really care. Right? What I'm trying to do is get you guys to recognize. Let me turn off all these arrows so I don't confuse anybody. What I'm trying to do is get you guys to recognize, you know, how many times have you guys been the victim of a stop run and then it turns around and goes the other way? Just as a general statement. 7,000? Mitch, I know you've been victim of this and frustrated with this a couple times. Right? The market has a tendency to stop run. That's just what they do, right? So if you can take advantage of that at a Fibonacci area, right? Instead of being the victim, you can be the perpetrator. So this is what we're looking for. When you get to a fib, let it stop it out real quick. Synthetic triggers not really breaking through the fibs. Let's add this. A bonus is long way back to synthetic triggers. Right, so this is kind of the bonus look where you've got such a long distance to get back to your synthetic triggers. Yeah, they're just stopping out the weak shorts at an area where they're going to go up. All right, so let's keep this party rolling. Right, so obviously stop out and, lo and behold, they get to multiple time frame resistance, but they went through it. So again, we're not looking for short trades, right? All right, so now we get to, granted it's 6 o'clock at night, so, we get to resistance. Look what happens. They stop out resistance by a little bit. Whenever you get to multiple time frame resistance and they're going to stop you out, this is what you're looking for, guys. This is where your stop out short opportunity comes from. You guys see it? There's your stop run and the market goes down. Now, granted, it's not 100 ticks to the downside, but if you're getting short, let's just say at 25 on the way back down, right, there's an easy plus 20 in there. You guys see the trade? So we're really, really talking about one specific opportunity at support and resistance. All right, so let's keep going. Granted, this is way deep overnight. All right, so we get to resistance. Obviously, our synthetic triggers are way beyond the resistance, so we're not looking for short trades, right? Do you guys agree with that? We've already set up the rule. Synthetic triggers can't break the fibs by a whole bunch, or else we're going to keep going up. All right, so look at what happened here. We get to support, right? And you can basically, if you really need to, you can lock in a horizontal line, right? So there's your low pivot, 65. Let's see what they do. They kept going through it, so no big deal. Obviously, there's a gap in the data in here somewhere. All right, let me get to some non-gap type data. All right. Here is 6:45 a.m. Would you guys agree we hit resistance? We hit it twice, right? This is your stop out. Do you guys see the stop out? Maybe one or two ticks past the last pivot high. If all's well, right, I like to be short from 70, maybe. with a 74 stop, 73 stop. That's what we're looking for. Now, instead of being the victim, you're the one actually dishing out the punishment. So, 70 short. I mean, before it even blinked, this is up 25 ticks. And then you know where they're going. This is where, you don't get these all the time, but when you do, multiple time frame resistance with a stop out down to multiple time frame support. It's almost $500 a contract right there. All right, so we hit support, but we didn't stop it out, right? So not a lot you can do there. I mean, granted, some people are going to take long trades off of multiple time frame support anyway when the triggers roll over, but that's not the trade that we're talking about. Okay, so we get to resistance again, and the triggers get through it, so we're not looking for short trades, right? So here's one hit of support. So with our trigger lines above it, we're looking for a stop out. Let's mark that low price. 70 is the low. Would you guys agree this is the long trade? Multiple time frame support. They stopped out the low by a tick. All right. Everybody else agree with that? Now, how far is it going to go? You never know. Right? So if you're long here and you lose 5 ticks, that's okay. Right? That's the whole purpose of recognizing that look. All right, so start the process over again. This is an okay trade to take, right? And if you can get this trade and recognize that early and you get your stop up pretty quick, right? I mean, if you get back to your synthetic triggers and you fail, you're probably going to be back out here. So depending on how quickly you get in at the support, worst case, you're going to lose a few ticks. I'm okay with that. Jay, is there any method to sit on both sides of the fib line? No, absolutely not. And the reason why is because your synthetic triggers aren't fast enough to give you both sides of the trade right off the bat. It's either one or the other. Are you long crude? All right, so let's start the process over because, this don't happen all the time, guys. Obviously, you can see we've only had 2 or 3 opportunities of this in, a couple days already. So this doesn't happen a lot, but when it does happen, it's good stuff. Or it's going to be a loser quick. All right, so we have kind of chopping back and forth, right? We've got new fibs at noon. The market's kind of trending up. All right, so, this is where I start watching it, right? Multiple time frame support, getting close to it. Kind of stuck in between a couple areas. This is also the spot where I'd watch for potential shorts, right? Does everybody recognize resistance? Synthetic triggers not getting through it. So this is where, if we get to 41.47, and we'll talk about it before we even see what happened, right? This is where you say, maybe we get an opportunity at a counter trend trade short. You guys see that? Now, how far is it going to go? Obviously, you've got some trouble here, but it looks like it might be range bound, maybe down to 41.20. Once you get short, let's say you're short at 45, right? Your maximum risk is right here. And if you can't get through this little trouble spot, right, if you're short at 45, you're already up 7 ticks, right? Usually a reversal bar is probably going to be the out. Just obviously you hit support, right? All right, so we have hit resistance. Everybody agree? So we're looking for a stop out of that resistance. Anybody have an idea where that stop out might come from? Didn't stop it out yet, did it? All right, so we didn't get a stop out. This is where we were looking for the trade, right? To get back up here and stop everybody out and ruin everybody's day. And then go short. Everybody agree with that? All right. So, you kind of see, again, this is the same look we had before. Support. They overran it by a little bit, and then they made a quick reversal to the upside. What do you guys see about that as well? Right? When you're looking at synthetic trigger location, does it make sense to take a long trade there? You hit support. That's really bigger stop out than I like, right? That big of a stop out, I'm not really on board with, so I could skip that and be totally fine. I like to see little stop outs. All right, so we've got support. Everybody agree? Synthetic triggers are above. So the stop out, right, is going to come from 73, give or take. Didn't get any reversals out of it. Didn't even slow down. That's okay. All right, so now let's talk about resistance being hit. Right? This is the spot where I say to myself, if we don't go any higher than this, maybe not more than a tick or two higher, you might get the opportunity. Do you guys see it? You hit resistance. As you start to come back down from the top of the resistance, creates counter trend trade. At the same time, look what happens over here. You get really close to support, and then you stop out the lows by just a little bit at support. Do you see it? They do this all the time, over and over and over and over. It's hard to take with the synthetic trigger strong up. All right, Steve, I'll fix it for you. I was going to turn them off, but we need to see if they break through or not. The only thing you have to worry about is, did the trigger lines break through the areas? Right? I'm going to go back to the simple lesson that we do all the time. And granted, we do it with the small trigger lines, but remember, trigger lines are trigger lines, right? The synthetic trigger lines are nothing more than small trigger lines from a bigger chart. Okay, this is a chart from July 2003. July 3rd, 2015. So this is almost a year ago's chart. It's the same thing. Look what happens. We get to support, They stop support out. The trigger lines don't get through it. Reversal. They come back up, retest. I can't tell if they stopped that out by a tick. Small triggers are below. Reversal. You break through. You pull back to trend trade. If you were able to go long off of this blue line and make 20 ticks, and then you were able to go short from the red line and get back to the blue line and make another 20 ticks, you're not going to be scared taking this trend trade and putting a limit order in right below the area. As long as they don't break through with significance, Steve. Remember our trigger line expectation. If the triggers break through an area, we expect a breakout, or you have to wait. If they don't break it, right, that's the whole point of having the Fibonacci areas, is so we can determine where we need to start paying attention to the trigger lines. All right, you guys are going to get me off base here if we don't focus up. So here's your fix. Okay, and I'm just going to do this for an experiment for you. How's this, Steve? Look, I don't mind doing different things because I really think the lesson is paying attention to your Fibonacci areas. Right, so how's this? No trigger lines. Is that easier? Now, there may be some cases where we don't do it because the synthetic triggers broke through, but so Fibonacci resistance, watching for a stop out. There's your stop out. There's your reversal. Short money. Support. There's your stop out. Reversal bar to the long side. Let's see where that goes to. Resistance. Right? Resistance. Stop out of resistance, and the market goes down. Right? No trigger lines needed. There's your trend trade short in the middle. Right? Market's going down, pulls back to fibs. All right. Let's not get off base here. Fibonacci resistance. Agreed? Would you guys agree this is a stop out of resistance? So can we look for a short trade if we get a down bar? All right. Everybody says yes. Yeah, we didn't really get one. That's okay. Sometimes the market speaks, right? So let's see what we end up with. A whole bunch of up. All right. We get to resistance. That's a heck. Ooh. All right. This is a heck of an up run. We get to resistance, right? Everybody sees the high pivot. I'm trying not to get forward ahead of this so we don't cheat. And man, it's just a retest. We didn't quite stop out the high right there, did we? Still a beautiful resistance, but we didn't stop out the high. It didn't quite fit with what we were looking for. All right, so resistance. Let's see if we stop out the high, right? You guys know where the high is. It's going to have to be really, really tight, probably. What do you guys think? Short trade or not? This is where you're saying, man, I wish I had my small triggers or my trigger lines to know if my synthetic triggers are getting through. But I want you to look at it. Resistance, when they stop out the high by 1 or 2 ticks, usually they're going to keep going down. Granted, this is, into some support. right? Obviously, even if you got short there, you'd have to manage it. All right, so let's watch what we got. All right, so we've gotten to support. All right, support was working good. All right. Granted, I know we got these arrows on here. Let me get rid of these silly arrows. I was trying to make it so it's nice and clean. What do you guys think? Is this resistance and a stop out of resistance? Right now, there's some other beautiful things going on here, like sharp points and stuff like that. But right, this is one where you lose a few ticks, and that's okay. Right? If you took this short trade, right, and you take the other trades in there, I don't mind losing 5 or 6 ticks. Granted, they stopped it out again and then went. Sometimes they're boogers. Right, but I want you guys to start thinking about, not just trend trades in the middle, but what look or what criteria do I have to have at a fib area, right? Here's a fib area, caused a pivot. Here's a fib area that caused a pivot. Would you guys agree this is a potential short trade? Do you guys see it? Fibonacci resistance, a stop out of the resistance. Are you going to be able to make some money to the short side? You never know. We'll find out. Right? Now you can also go a little further, right? And say, all right, I'm at resistance. We stopped out the high. I'm looking for some shorts. You can also say the same thing over here, right? If we get back down to 41.85 and stop out the low and make a quick reversal, that may very well be a bottom. But if you're short from 42.10 and you're out at 86.85, you're pretty happy, aren't you? Now, I know it's crazy, but maybe you get a long trade. We'll see. They didn't stop. Right? This is even without the benefit of our trigger lines. Larry, you're beginning to see the pattern? Good. Right? If this was on a bigger chart, right? Let's just say this was a 14.2 chart. This might be one bar and then one more bar. Right? We had the same thing here this morning. Look at your crude oil this morning. Winner, you were asking me, why the heck did you go long? Well, look, you had a low pivot. This is today's. It stopped out the low pivot at multiple time frame support by a tick, and then it was worth 25 or 30 ticks. Montreal, you see that? I know we talked about it this morning. Right? Then look what they did. They stopped it out by a whole bunch more, but on this chart, the synthetic trigger is still way up. Right? We should keep going up. And we should get to multiple time frame resistance on the 14.2 chart. This is today's. Right? And if we get up here and then we stop out the high and we make a reversal, that's going to end up being a top. Anyway, I'll get back to the lesson. But that's the live look of it. Right? So again, we're doing this without the benefit of trigger lines, but even waiting for it to slow down a little bit, look what you did. You made it down to multiple time frame support. Pretty cool. I think so. All right, now didn't quite get a stop out at this resistance, right? But in a strong downtrending market, divergence and a fib trend down, not a bad thing. All right, so we get to support. All right, let's see what happens. Are we going to stop out this low pivot by just a little bit and then take it to the upside? That might be asking a bunch in that strong downtrend. No dice. Right. There's your trend trade to the downside after it breaks. All right. Now, look at this. Really close to support, up to the mid band, and then right at support. Does that qualify? What do you guys think? You guys remember that picture I made for you the other day? Hang on, I'm going to show you the picture. This is a more aggressive way of doing the same thing, right? But it's the same thought process, a pivot from support, looking for the market to get down to the bottom of the support. And this is a more aggressive entry at the support area. Sometimes these get run over. If you do, you lose a little bit. But does this kind of make more sense to you now, just after this little lesson? Seeing the support area, letting them bounce up, and then stopping everybody out. And then here was the after of that one. Right, and I even wrote on there, if all goes well, that's what we're looking for. It only takes one or two of those bad boys a day to add 30, 40, 50 ticks to the bottom line. All right, so there's your pivot. There's your run up to your mid band. There is your pullback to the fib. You guys starting to see it now? This one's close, but you can see stop out right up to multiple time frame fibs, sharp point, back down again. Second chance if you missed it. All right, close to the fibs with a pivot. Let's see if they stop it out. Nope. All right, so there's midnight. So we'll roll on. You guys want to do some more of these? Do you guys like it? You got to like it. You don't have to like it, but you should like it. All right. We hit resistance. And that was it. Sometimes they hit resistance, especially with that 165, and they just go. Everybody on high alert at 68, right? Are you going to be brave enough to buy it if it stops out 68 and then reverses? This is the point where you're starting to get antsy. It didn't work, right? If you went long here, that's okay. Sometimes you lose a little bit. Obviously, you know, if we have some synthetic triggers on here, maybe they were indicating we weren't going to go. We're doing it without the benefit of synthetic triggers at this point. All right, so you guys already know, right? Fib and multiple time frame fibs and a 165 EMA. We're watching for something. They broke through. They ran up a little higher. We now have a fib. Right? Can we get a little stop out of that 4106 and then a reversal? Well, there's your little stop out. Right? Now we're going to get a reversal. What do you guys think? What about second chance if you missed it? Again. Oh yeah, that's exactly what it is on a 14-2 chart. But we already called that earlier, right? Stop out of multiple time frame support reversal, and there's your stop out of multiple time frame resistance. Isn't that cool? That's exactly what that is right there. I'm sure my more experienced traders are already looking at that. So we'll check back on your charts in a little bit and see what you guys are up to. All right, guys. So let's keep the lesson going. Is that enough for a short? Did that first one come close enough? It's right there. That's the one I like to see for sure. Now, granted, I don't know what my synthetic triggers are doing, so I have to preface that. But multiple time frame resistance, stop out, right? This is where you start going, here's my target. From 4140 down to 4105. Yeah, it looks like there's your second chance if you missed it. Once again, you guys are starting to see that second chance opportunity, aren't you? And I'm sure that some synthetic triggers rolled over right here. All right, so obviously they didn't make it all the way down. We got a pretty strong trending market. So you guys stop me if you have questions. There's a fib hit. Here's a stop out. Did everybody see the stop out? Everybody see that? Type of Y in the room if you see it. Fibs are hit. Fibs got stopped out. Right? If you're long from 57, you've got a 53 stop. And you've got an 85 target. Pretty easily get your first plus 20, right? And Scott, I said that earlier this morning. I put a plus 20 to 25 in there regardless of where my target's at. Just put one on now on the CL. Good. Hope it works out for you. All right, so obviously the market goes screaming to the downside. Check out the pattern. You guys slap me if you don't see it because I need to point it out to you again. Stop out of resistance. Can you guys get on board with this? Short trade? What do you think? Hit resistance, stopped everybody out. Woo, off to the races, down to support. That's 20 ticks to support. All right, so we hit support. We hit resistance. Let's see what happens. And they broke through it. All right, so we'll start the process over again. They didn't make any pivots. All right, now granted, I'm sure my trigger lines are screaming at this point. But there's your pivot from resistance. There's your stop out. Ooh, look at that. You guys starting to figure it out? We're talking about trading right from the edges with teeny tiny little stops. But we had to wait for that stop out. I'm giving away all the good secrets today, guys. All right, you hit multiple time frame resistance. Ooh, look, you stopped out multiple time frame resistance. Why, winner? All right, I missed this one. Sorry. I got all excited about the sell, but look, right by support and stop out of multiple time or support anyway. Back up to resistance. Stop out resistance. It's getting messy, but there's another pivot. There's another stop out. You guys starting to see the pattern? Hey, Robbie. No, what we're talking about is making a pivot by support or resistance, and then physically the market taking out that pivot by just a little bit and then reversing to the downside. Making a pivot by support, stopping it out by just a little bit, and then reversing to the upside. So we're talking about, counter trend trading. Making a pivot by resistance, stopping it out by a little bit, and then going the other way. Right? So even in a live market, this is current live right now on a 14-2 chart. So we had a little one tick stop out of a pivot, which was good for 30 ticks to the upside. And then we had a stop out of support, which took us up to resistance. And we talked about, the 95 area being a potential top because we have multiple time frame resistance on the big chart, and we stopped it out. So, there's a good chance of this being the high for a while. So you see it's the same thing. It's pivot, stop it out, reverse. Pivot, stop it out, reverse. All right, so Steve, let me see what you did. Just a peek. I know you got so much stuff on your charts, but pivot, did that stop it out by a tick? And here's the beautiful thing about it, Steve. You shouldn't even really have any money at risk anymore. If you get these edges, you don't have to really risk much money. So nice job with that, Steve. All right. So let's go forward here. Do you guys want to keep going with this, or do you guys have it under control now? I mean, we can do this all day long. Pivoted support. Man, didn't quite stop it out. Didn't quite stop it out, but that would have been the long. All right, so let's reset. Let's see what we have. Kind of close together, support and resistance. Not my favorite. Usually let these things kind of clean themselves out a little bit here. Whenever you got a bunch of support and resistances right by each other, it's hard to really know what's going to happen, right? So this is not a pretty area. It will get pretty. All right. Resistance. And resistance was just good on its own. And that happens. All right, so support. I guess support was good. Sometimes support's good on its own. It wasn't really a stop out of the area. All right, so resistance. And you can see where they're probably going to go up to. All right. Resistance again, and no dice there either. Oh yeah, no, the 14-2 already did it up at 40.97. Yeah, this is the live version of it right here. And that's why people were getting short up there. Right, so there's a one tick stop out that caused a 30 tick bounce. Then we had the pivot stop out that caused basically a 50 tick run up to the upside. Right? Now we've got the stop out of multiple time frame resistance. So somewhere around that 93, 92 area, hopefully you guys got some short trades in. Right? And if all goes well, we're going to make it all the way back down to at least 40.50. So here it is live. And you can go back on the 14.2 chart. You can go back on an 8.2 chart. You can go back on pretty much any chart and see the same thing. Right? Here's your resistance. Here's the stop out. And the market, keep in mind it's a big chart. That's 50 ticks to the downside. Here is your resistance. Here is your little stop out of resistance. And that was worth a pretty easy 25 ticks. We talked about that one yesterday, didn't we, Larry? It was a little too early for me. I actually sold 66 and got out at 66 because I was like, it's just too early for me in the morning. I wasn't awake yet. That was a pretty easy 25 ticks down with support. Phil D, you say it works well on the NASDAQ and the YM. It works pretty much on every market, and it works pretty much on every time frame. Now, again, you're going to be against your trigger lines. Let's get back to live over here. Right, so here was the stop out on the big chart. Basically just made a double top with divergence on the small chart. But, do you see any Fibonacci reasons why that might be good? Of course you do. Right? And until further notice, it's probably going to be sell signals or nothing from 76 to 82, give or take. Right? I don't even need trigger lines to tell me that. Strong push down through all my fibs. Hopefully, you guys are short closer to the 95 area. Those of you guys that aren't short yet, I'm sure even with trigger lines, it's probably coming in somewhere between 77 and 82. I'll put my trigger lines back on. All right, so questions about that? It's going to give you guys something to study tonight, right? All right, so here it is with all your trigger lines back in play. All right, and you can see pretty much the same thought process. Hopefully with that lesson, you guys got some of that counter trend love up at the top from the big chart. All right, so what are you looking for now? You're looking for more shorts. Pretty much shorts and nothing but shorts as long as we stay below 82. Pretty easy read, right? All right, so questions. Larry W., that's what you needed. Good, I'm glad. That's a good lesson. Mr. Attitude, how do you buy and sell that? Well, you can do a couple things. You can put a limit order at the area that you anticipate, right? And what you'll find is, and that's a good question, right? The more experienced traders will get in at the spot, anticipating that to happen, right? Or the first couple of ticks down on a bar, they'll get in, just hit market order. So, how you get into it is really your business. right? Whether you get it in a stop order below the area, right? If this was my only chart, as it traded up in here, I'd probably put a stop order, right there at 90. So as it's coming back down, it'll get me filled. And if it never comes down, then I don't get a fill, right? So some people are just more aggressive and they'll get in at the spot. And then some people are saying, okay, I'm going to wait for a little confirmation or some down bars on the smaller chart or, you know, halfway down the bar. So does that make sense, Mr. A? The whole point is to know before you get up here that that has a potential to be the high of the day, or at least a short-term top. Right? Here's what I posted at 7:30 this morning. Read this. Right? So just to bring it in here, I wrote, should see it go back up to 40.92 to 41 again. Now, if we're going to see a stop out of multiple time frame resistance and make a true, right? So just to read it again, I put this in. This is at 7:32 this morning, right? So I just want to give you a visual on when I was thinking this. Over here is where I was thinking it. That we should go back up to this area if we're going to see a true. All right. So here's where I was thinking it at 7:30 this morning. That we should go back up to this area to create a top. Now, granted, they didn't do it in the first shot, right? They did it from the second shot. They stopped everybody out, got to the 165 EMA and fibs, and then took it off to the upside. So this happened. What time did that happen? 10 o'clock? 9:50? So 2 hours and 20 minutes before it ever even happened, I was already thinking, get up there so we could sell. I was trying to get long. Actually, I did get some longs to get up there, right? So I went long over here on a one tick stop out of support at this multiple time frame fib. I thought that was going to be it. But they decided to get to the open, stop everybody else out, then run up to the area, stop everybody out, and then go back the other way. So I'm going into, the day already kind of anticipating, stop everybody out in reverse, you're going to get more longs. Stop everybody out in reverse, you're going to get more shorts. And it's all predicated on, a cynical belief that whoever they are love to stop everybody out. It's just what they do. Right? So instead of being the victim, you guys can start narrowing in on, look, maybe you get one or two of these a day. Right? You're not going to get 10 of them. If you do, that's going to be some kind of day. Right? I've seen guys using a similar method with our software, right? Make 200 or 300 ticks in a day. Right? Now, I want to keep you guys focused. And I want you to really think about something. And I don't want you to lose sight of the big picture here. Here's the big picture. If you trade one contract and you average 25 ticks a day, you make 5 grand a month. If you trade 2 contracts and you average 25 ticks a day, you're going to make 10 grand a month. Now think about what your job is as a trader. Your job is to spot low risk, high reward opportunities, right? And there's basically, the two that I like the best, obviously, are the one that we just went through. I love selling the top, buying the bottom. And I don't mind getting run over if I'm wrong. And that's really the biggest secret to it all, right? You're going to be wrong half the time. But when you're wrong, lose 5 or 6 ticks. And when you're right, make 20 to 50. And everything will take, you can have a 30% winning average on those if you're making 20 to 50 ticks on one trade. Right now, obviously, as you guys go through the trading plan, right, this is the other one that gives you high probability setups. Right? When everything is screaming in your direction and your small triggers are below your synthetic triggers, resistance is usually pretty good. You can't just sit and wait for stop outs and reversals all the time, right? If you get this look in the middle, you've got to take advantage of that one too. Right? So the people that recognized, the 95 area as their sell area, right? 95 to 55, that's 40 ticks. All right. All right. Chris, short at resistance, out at support. I expect nothing less out of you, son. Nice trade. All right, Montreal. All right, so you got a bit of it. Right? So you got in at 74, you got a real nice entry on that. And you got out at 59, and we'll see where they go from there. Right? Maybe down to the next higher time frame fibs, which is where you've got your target. So nice pickup on. See, this is a good example, Montreal. And Don O, you can attest to this because he's living proof. Don O did nothing but these trades in the middle for the first 2.5 years of his use of our software. Those are the trades he wanted, everything going your way, and he did over 80% winners with those. And he averaged between 25 and 35 ticks a day, which is great, right? Here, I'll give you a link to the PDF. Read it. 25 to 30 ticks a day, even if you can just get up to a 2 lot or a 4 lot. You get up to a 4 lot and make 25 ticks a day, that's 20 grand a month. Most people on the planet don't make $250,000 a year. Like 99% of the people on the planet don't make $250,000 a year. So it's not can you do it, you can do it, but you have to make up your mind how you're going to do it. Right? And if you take these best trade looks in the middle with everything going your way, I'm totally fine with that. You should be able to get close to your 25, 30 ticks a day. I've seen it done. I know it can be done. But think about that number if you start averaging 40 or 50 ticks a day. All right, so I know you guys all have a bunch of trades in here. Ram, let me see what you got. short and you got bumped out, but you went short again and you got out at support. Nice job. Just a little unfortunate to get bumped out at such a nice area. But you did get back in again, which is good. Ken W. All right. So you were going short kind of aggressively as it was going up there. And then you got out, but you got back in, and then you got out, and then you got in, and you got out. You know, at this point over here, Ken, it's relax. Anytime all your triggers are going down and your small triggers are screaming down, you can't just jump out. Just relax. Fortunately, you got back in a couple ticks better, which is lucky. But it really should have just been short and hang on until you get down to the promised land. So you got away with it that time, but sometimes you don't get away with it. All right, Clifford, let me see what you got. All right, so you were going long to get up to those areas, but nothing coming off the areas. All right. Still 140 in the bank. Halfway home. Clifford, you just need one more of those, and you'll be off to the races. All right, Montreal. Can you say bingo? All right, let's go back and look at the big picture. Multiple time frame resistance at 93 down to 48. All right, Montreal. There you go. And small chart might not even stop. We might keep going here. All right, so what do you need to see on this big chart for some continuation to the downside? All right, you're going to have a substantial break of support, turning it into resistance. And then where are we going to go? We're going to go down to 39.30. Might take 45 minutes, but right, if we break through here, hell of a profit target if you were short from 95 or 93 or 92 or 90. Also, if you had any reason to get long off of the big chart, you could really make that money twice and really could be done for the day. All right, so small chart says we're breaking through. So what do you guys think? You want to try our little technique, see what happens? Let's see if we can get a pivot at resistance, and then they stop it out and then fail. What do you guys think about that? You like it? You now all have the keys to the kingdom, guys. There's some other opportunities at tops and bottoms, right? If we have divergence and, I've got videos on the website for a couple of other types of opportunities. There's breakout opportunities. I have a tendency to teach the one that I like best and spend more time with it. Right? The best look trade with everything going your way, and then, attempts at tops and bottoms. There's a couple other opportunities, there's a lot of opportunities. What you really want to have is an opportunity that gives you high probability setups. A divergence pattern in your fib to fib oscillator at multiple time frame resistance. Do you see it? Fib to fib, coming back up to the 75 sell line, failing from multiple time frame resistance. You didn't get a stop out by one tick, but the stop out came from the big chart. So a double top with divergence at multiple time frame resistance. Call me crazy, but that's not a bad opportunity. I would really call it trading from the edges, Steve, if I had to put a name on it. Just a stop out failure at multiple time frame support or resistance or support or resistance. Yeah, I mean, look, there are people that can trade all the moves, all the twists and turns. I can't do it. It makes me crazy. I end up with 50 trades in a day and lose $1,000. If I do 50 trades in a day, it's usually a bad sign. Right? What I'm looking for is give me the opportunities that have, you know, really, really good odds. Give me two or three, four of those a day, and usually things are going to work out. Yeah, I had is it Bill H? He used to do like 75 trades in a day, and he could do it. But he also said if I take 3 ticks on the S&P and I do it 70 times, then I'm going to make a ton of money. It's a different mindset. And look, bottom line, he still traded the triggers and the fib lines. And in the end, I don't really care how you trade it. Whatever is most comfortable for you, I am totally cool with. I want you guys type in a number for me. What's your goal in a day? How many ticks? I mean, I hope 25 after showing you that sheet is kind of a minimum goal for you. 25 minimum. Yeah, I know yours is more like 50, Dono. So you don't have to lie. You can put 25. You can put 50 in there because I know if you make 25 in a bad day, that's not a bad day. You know that day where you did no trades, Don? Right when you left, we got one trade. Yep, that was it. Because that was the large time frame spot and the small time frame spot. And that was good for 45 ticks. I love these types of trades. You will get your butt handed to you from time to time doing them, right? But that's the whole point of, keeping your stops in the right spot, losing a little bit. And when you do get them, be patient enough to get that 30, 40 ticks. All right, guys. So I'm done with that lesson. Hopefully everybody understands, what we did. If not, I did record it so you can go back and watch it again.